This is not your father's stock market rally. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 6, 2017. And I say this is not your father's stock market rally. If you remember the rally back, the dot-com rally, and whether that was your father's rally or whether you participated in that one like I did, maybe you've been around trading a while. Uh, the point is, this rally is a little bit different. This has been an impressive rally for sure. It's been going on for about 8 years. The market's nearly tripled from the lows after the financial crash of 2007, 2008. But there's some substantial differences, and I thought it would be worth checking those out. But first, we had 13 sessions in a row on the indexes that put in records. At the end of last week, pulled back and did not put in new records right there at the end. So is it taking a pause? It looks like it. We're going to look at the futures market open here, the pre-market open on Sunday in just a minute. But let's talk about this rally versus the last rally. I think it's really interesting. So here's an article I came across on Market Watch. And the headline here is "Stop, this is not like the dot-com bubble, it's much worse." That's interesting. Of course, they got a picture of Mr. Obama there with a bubble. That's pretty interesting. The author here is Sean Langlois. And here's the interesting thing in this article. It's this table that he's put together. What he's done is compared some key economic measures from the rally, the 5 years, from 1995 to 1999, and then the last 5 years, 2012 to 2016. And there is a stark difference here. If you look at any of these measures, GDP growth, the prior rally, GDP growth was very strong at over 4%, and it's pretty anemic now, under 2%. GDP trend similarly weaker. Productivity growth much different. A 0.5% here. Federal debt, nearly 4 times as high. Uh, Personal debt off the chart. Uh, and particularly the S&P 500 earnings growth rate, 3 years is negative here, 5 years is nearly flat, 10 years less than 1%, compared to very strong earnings growth driving that rally back at the dot-com era. So the author said this rally is not like the dot-com rally, and potentially the crash is not going to be similar. It's going to be a lot worse. I don't know if that's true or not, and we don't know when it's going to happen. I believe it is impossible to call the top of a market, or the bottom for that matter, but it is possible to have evidence to find out when did the trend really turn, when did it change. And every time the trend has changed in a meaningful and lasting way, we've had clear evidence of that using some analytical tools. So we can't call the exact top, but when it has turned and started down, we'll have some time, we'll have some tools, and we will be able to know with a high degree of certainty when the market has turned and begun heading down. And it will at some day. Will it be Monday? Will it be next month? Will it be next year? Hard to say. We will know when it has turned for sure, though. So I'm watching very carefully. I agree that this market is, it's been an amazing rally. It's headed up. It's strong. It's still going, but it will end someday. And I'm just being very, very cautious. And if you follow my updates week to week, you know that I've talked about it pretty much every week. And that doesn't mean I'm a bear or apocalyptic. I just know that over time the market runs in cycles. So right now the market's going up. We're trading up with it. Currently in the picks I published to my subscribers, we're in 9 positions, and 8 out of the 9 are long, and 7 of those 9 positions are in really, really nice, healthy profit. So we're profiting and participating in the market. We're just watching really close for when it does turn, and when it does, it could move pretty fast. We'll have some heads up, but it'll move down more dramatically than it goes up, right? The saying is, the market takes the stairs up and the elevator down. But that's not to panic. We'll have time. We'll be watching it. Let's take a look at the futures markets, how they're opening right now. So this is the S&P 500 futures market. It's on a 10-minute chart. And again, we were down Friday, and you can see this open Sunday. This is the beginning of the week, the pre-market open, and it's down pretty sharply. It's these 3 price bars right here, and it's down about 7 points. So if that continues on to Monday morning's open, we may see the market start to pull back, and we'll have some short-term trades there, and we'll adjust and adapt to that as it plays out. Again, not calling a market turn at this moment by any means, but we are watching very, very close. So meanwhile, that's where we're at on the indexes. In an uptrend, heading up, we're trading with it. Let's go ahead and take a look at gold and oil before we wrap up for this week. So here's the gold futures contract on a daily chart. We've been talking about this rally. We've been trading this rally and saying we thought it had some real legs, and we said we thought it might pull back, and it did last week. Pulled back. We're getting a bit of a reversal down here at the bottom. So I believe, based on this analysis, that this market, the gold market, has some more legs and some more upside. And after this little pullback, remember, it moves in higher highs, higher lows, higher highs, higher lows. We're expecting higher highs. We're going to try and trade that leg when it proves that it's getting going. So still bullish on gold and still looking for a rally in oil, and it still has not proven that it's going to do anything. It's been in a pretty ugly channel here for a couple of months, just going up and down in a pretty narrow range. Till it breaks out of that range, we're not going to be sure what the direction is. Would like to see a rally. We think if it can break through this overhead level here to about 56.27, then there's a pretty good upside coming, but it hasn't proven it yet, and it's got a ways to go. So oil is really untradeable, and we're not in it at this time. We're not trying to trade it until it actually picks and proves a direction. Well, that's the update for this week. Again, this may not be your father's rally. It may end differently. There's different fundamentals driving this market than there were back then. We'll wait and see. We'll trade the realities of whatever is happening, and using the tools over the last several years, we've been able to be consistently profitable no matter what the market does. And I think that's the key. Being consistent, using a proven system, managing risk, and only taking the very best trades, and then managing them effectively. Please send your questions, your comments, your feedback. I try to respond to everyone, and I look forward to giving you the next update next week and in subsequent weeks. As things do prove themselves, I'll give those updates and offer some insight and hopefully some tradable ideas. Thanks. Take care. Bye.